Michael Hirson, Director of Asia Practice at the Eurasia Group. Michael, thanks for joining us. Good to see you. Let's talk about expectations going into this round of trade talks. I mean, it's been up and down, the expectations all week. Sum it up for us. Where do you stand on what could be achieved?
Well, I don't think we're going to see any breakthroughs, certainly from this round of talks. I don't even think we're going to see a formal agreement of a deal, a one talks end. But it does seem like we're in a short-term positive in the sense that Beijing has reacted in a quite restrained way to a really inflammatory move that the United States took earlier this week with sanctions over Chinese technology companies and China's provincial government in Xinjiang province over treatment of the Muslim minority population there. So it's quite a strong move that had been in the works, had been debated within the U.S., and then the timing is really notable, right? They make this quite hard-hitting move right on the eve of trade talks. So it really tests Beijing's restraint here. But, China did not cancel the trip. Talks thus far, anecdotally, seem to be somewhat productive. So I think short-term positive in the sense of avoiding further escalation for the time being. But I think there are real reasons to be skeptical as to how sustainable any truce will be coming out of these talks.
They might have been restrained in some of those answers to our inflammatory marks over here, but talk about what's going on in Hong Kong and in China's response to some of these United States-based companies operating over there. I mean, that's a real risk for businesses.
Absolutely, and that is one of the pressures on this relationship that I think makes it smart to be really skeptical and cautious about what the medium term looks like beyond these next few days. So that's right. Chinese companies are taking their cue from China's leadership in standing up to what they view as politically incorrect statements or interference in China's domestic affairs with respect to Hong Kong. To the U.S. business community, that increasingly looks like it's infringing on freedom of speech. So I think this is a move that, or a reaction that on the one hand demonstrates China's market power, but on the other hand, I think is going to galvanize a backlash or maybe a more constructive conversation in the U.S. business community about how to deal with this, because this is the new normal. This is not going away. Companies are going to continue to be caught between China's demands on this kind of issue and the backlash that they face at home for being seen as bending over backwards to Beijing.
To what extent do U.S. companies that are taking a real interest in the Hong Kong protest yet already have sales in China kind of being a bit over the top, given that freedom of speech doesn't exist in China and they may have had operations in there for many years and made a lot of revenue from there? Is there an odd kind of disconnect between why you speak up to one issue but not the other?
I think there is something of a disconnect, and I think it's quickly closing in the sense of businesses now recognizing what's at stake here. We haven't seen much of this to date, actually, insofar as U.S. businesses are concerned. Whether it's the trade war or Hong Kong, U.S. brands haven't been really at risk until now. And the NBA is a huge target, but the NBA is also large enough to be able to push back. And with Adam Silver, the commissioner, revising the NBA statement and pushing back on China's pushback and saying, look, this was one employee and we stand for freedom of speech, I think they ended up in a pretty good place, the NBA did. But it took a long time to get there. And this kind of statement where you anger China, but you also anger your domestic audience is something that I think businesses are going to have to be better in terms of their response time.